Good day, fellow investors. My name is Sven Karlin, and today I'll discuss portfolio diversification versus portfolio concentration. Many say that diversification is the best thing to do, and I agree. If you don't want to spend more than 2 minutes per year on your investments, then diversification is the best thing. You buy index funds and that's it. You're happy, you don't know what's going on, you don't care. You will have an average return in the next 10, 20, 30 years, which will be terrible, maybe 2, 3, 4%. However, if you're not happy with the average return of 3, 4% that is expected for in the future, don't get confused by the past average return of 9%. That's just because interest rates went from 15% to 0. That's a different story. You can check my video about index funds. So if you want higher returns, you have to have a portfolio that is concentrated in a few of the best stocks out there. Warren Buffett uses to say that all you need in your life is a portfolio of six stocks, and that's it. If you can buy 6 wonderful companies during your whole lifetime, you will be very, very rich. Let me show you an example. In 1987, there was the famous October crash when the S&P 500 crashed 34%. At that point in time, Warren Buffett didn't buy the S&P 500. What he bought was Coca-Cola. For a few months, he was buying 1/3 of the daily volume of Coca-Cola on the stock market. So he bought his whole Coca-Cola position in a few months. The result? Well, first, Coca-Cola increased 20-fold, while the S&P 500 increased only 10-fold in the last 30 years. On top of it, if Buffett would have invested in the S&P 500 at that point when it was at 230 points, his current dividend yield, today, would be 46 points, thus 20% of his investment. However, as he bought in 1987, he bought Coca-Cola at around $2.3 per share, and the current dividend is 1.48. His current dividend yield on his initial investment is 64%. So that's 3 times more what the average investor got. Was it a problem to buy Coca-Cola? Was it a logical decision? Was it the best thing to do to buy one stock instead of 500 other stocks? Coca-Cola was cheap, he bought it, he got double the return, and he got 3 times the dividend. He's now enjoying a 64% yearly return on that investment just from dividends. That's crazy. Another thing for portfolio diversification versus concentration is how much should you concentrate or diversify. Now, if we take a look, if we have one stock that falls 20%, if we have only that stock, our portfolio falls 20%. If we have 5 stocks in our portfolio, the portfolio falls 4%. If we have 10 stocks, then the impact on the portfolio is just 2%. If we have 50 stocks, the impact on the portfolio is 0.33%. Now, what's important here? If you own one stock, then the impact is very significant. However, already if you own 5 stocks, the impact is much smaller. And the difference between owning 1 and 5 stocks is huge. The difference between owning 5 and 10 stocks is already much smaller, only 2%. The difference between owning 10 stocks and 50 stocks is just 1.7%. Thus, there is not much difference between owning 5 stocks or 50 or 500 as the S&P 500 offers, or the Russell 2000 or the Wilshire 5000. There isn't much difference. So especially now, that low interest rates have inflated all asset prices. If you want to be protected, you have to concentrate your portfolio in a handful of good quality stocks that will outperform the S&P 500 in the long term. That's the easy way. If you want to dig more, if you want to invest more time and effort into your investments, then you can diversify by investing in one or two stocks in different asset classes, from commodities, emerging markets, USA, Europe, and then you're well diversified around different sectors, different countries, and your risk should be very low and your returns very, very high. If you buy 50 companies in China, you will buy 25 that are frauds. If you buy 2 companies in China, there is a probability that one will be a fraud, but the best one that you buy will cover for 10 times or 20 times for the fraud. So be sure to invest in the best companies out there, especially now. Thank you for watching. Please share your thoughts below, subscribe for more, and see you in the next video.